The world is changing. A silent revolution is underway, transforming the very fabric of our financial systems. This revolution is not televised. It doesn't make headlines. Instead, it operates in the digital realm, powered by lines of code and fueled by a global network of computers. This is the revolution of Bitcoin, a digital currency challenging traditional notions of money and finance. Bitcoin is more than just a buzzword. It represents a fundamental shift in how we perceive and interact with money. It promises a future where transactions are borderless, transparent, and accessible to all. This new reality is being built brick by digital brick, one Bitcoin transaction at a time. But what exactly is Bitcoin and how does it work? More importantly, how can it be harnessed to generate passive income? This exploration delves into the exciting world of Bitcoin, unraveling its complexities and revealing its potential for financial empowerment. Imagine a world without banks, where transactions occur directly between individuals, bypassing traditional intermediaries. This is the promise of Bitcoin and the broader cryptocurrency ecosystem. It's a new dawn for finance, one where control is placed back in the hands of the individual. Bitcoin, often referred to as digital gold, is a decentralized digital currency. This means it operates on a distributed ledger technology called blockchain, removing the need for central authorities like governments or financial institutions. This decentralized nature is at the heart of Bitcoin's appeal, offering transparency, security, and autonomy to its users. This innovative technology has the potential to revolutionize not just finance, but various aspects of our lives, from supply chain management to voting systems. It's a paradigm shift, a move away from centralized control towards a more democratic and accessible financial future. Decentralization is the cornerstone of Bitcoin and the broader cryptocurrency movement. Unlike traditional currencies issued and controlled by central banks, Bitcoin operates on a distributed network. This network, known as the blockchain, acts as a public ledger of all transactions, visible to everyone. This transparency ensures accountability and eliminates the possibility of manipulation by a single entity. Each transaction is verified and added to the blockchain through a process called mining, ensuring the integrity and security of the network. This decentralized structure is what sets Bitcoin apart from traditional financial systems. It empowers individuals, giving them control over their finances without relying on intermediaries who often charge hefty fees and impose restrictions. This shift in power dynamics has profound implications for the future of finance. Bitcoin has emerged as a potential gateway to financial freedom, especially for those seeking alternative investment avenues. Its decentralized nature, coupled with the potential for substantial returns, has attracted investors worldwide. But Bitcoin is much more than just a speculative asset. It offers a range of opportunities to generate passive income, allowing individuals to grow their wealth over time. These opportunities include mining, staking, and lending, each with its own set of risks and rewards. Understanding these mechanisms is key to unlocking Bitcoin's full potential. The concept of passive income is particularly appealing in today's economy. With rising living costs and stagnant wages, individuals are increasingly seeking ways to supplement their income. Bitcoin, with its innovative technology and potential for growth, presents a compelling opportunity to achieve financial independence. The world of Bitcoin and cryptocurrencies is not without its share of uncertainties. The market is often volatile, susceptible to rapid price fluctuations that can leave even seasoned investors bewildered. Regulatory landscapes remain uncertain, with governments worldwide grappling to understand and regulate this nascent asset class. Security concerns also loom large, with stories of exchange hacks and scams making headlines. It's crucial to approach this space with a healthy dose of caution, recognizing both the immense potential and the inherent risks involved. Navigating this landscape requires careful research, a long-term perspective, and a willingness to embrace the unknown. Despite the challenges, the potential rewards and the transformative power of this technology cannot be ignored. The journey into the world of Bitcoin is not for the faint of heart, but for those willing to embrace the uncertainty. The rewards could be significant. Bitcoin, at its core, is a digital currency. Unlike traditional currencies, it exists solely in the digital realm, represented by lines of code and secured by cryptography. It's often described as digital gold, but unlike its physical counterpart, Bitcoin is easily divisible, transferable, and verifiable. Each Bitcoin can be divided into smaller units called Satoshis, the smallest unit of account on the Bitcoin network. This divisibility makes it accessible to a wider range of users, allowing for microtransactions and facilitating global commerce. Unlike traditional currencies issued and controlled by central banks, Bitcoin operates independently of any government or financial institution. This decentralized nature is what sets it apart, offering a level of autonomy and freedom unheard of in traditional finance. Underpinning Bitcoin is a revolutionary technology known as blockchain. This ingenious system serves as a public ledger, recording every single Bitcoin transaction in a transparent and immutable manner. Imagine a digital book accessible to everyone, where each page represents a block of transactions chained together chronologically. Each block is linked to the previous one using cryptography, creating an unbreakable chain. This ensures the integrity of the blockchain, making it virtually impossible to alter or tamper with past transactions. This tamper-proof nature is crucial for maintaining trust and security within the Bitcoin network. This innovative technology is not limited to financial transactions. Its potential applications extend far beyond cryptocurrency, with implications for supply chain management, voting systems, and digital identity verification, to name a few. Blockchain is poised to revolutionize various industries, ushering in a new era of transparency and efficiency. Section 3. Mining, unearthing Bitcoin's value. Bitcoin mining is often described as the lifeblood of the Bitcoin network. It's the process by which new Bitcoins are created and transactions are verified, added to the blockchain, and secured. Miners using specialized computers solve complex mathematical problems to add new blocks to the chain. This process, known as proof of work, requires significant computational power and energy. Miners compete to solve these puzzles, and the first to find the solution gets to add the next block to the blockchain, earning a reward in Bitcoin. This reward, along with transaction fees, incentivizes miners to participate in the network and maintain its security. While mining can be profitable, it requires substantial upfront investment in hardware and electricity. Factors like the price of Bitcoin, the cost of electricity, and competition from other miners all play a role in determining profitability. As the Bitcoin network grows, so does the difficulty of mining, requiring increasingly sophisticated hardware and consuming more energy. Section 4. Transactions, a glimpse into the future. Bitcoin transactions offer a glimpse into the future of finance, a future where money moves seamlessly across borders, bypassing traditional intermediaries and their associated fees. Imagine sending money to someone on the other side of the world with the same ease as sending an email. With Bitcoin, this is quickly becoming a reality. Transactions are initiated using digital wallets, which store the cryptographic keys needed to authorize and send Bitcoin. These transactions are then broadcast to the network, where miners verify and add them to the blockchain. Once confirmed, transactions are irreversible, ensuring the finality of payments. While transaction fees can fluctuate depending on network congestion, they are generally lower than traditional wire transfers or credit card fees. This makes Bitcoin an attractive option for international remittances and cross-border payments, especially for those underserved by traditional financial systems. Section 5. Wallets, your gateway to the Bitcoin network. Wallets are your gateway to the Bitcoin network. They are essentially digital storage spaces that hold your Bitcoin and allow you to send and receive transactions. Think of them like digital bank accounts, but instead of holding fiat currency, they store your Bitcoin keys. These keys, a combination of public and private keys, are crucial for accessing and managing your Bitcoin. Your public key acts like your account number, which you can share with others to receive Bitcoin. Your private key, on the other hand, is like your password and should be kept secret. There are various types of wallets available, each with its own security features and functionality. Some are designed for everyday transactions, while others are geared towards long-term storage. Choosing the right wallet is paramount for ensuring the security of your Bitcoin. Entering the world of Bitcoin may seem daunting at first, but with the right resources and a willingness to learn, it can be an empowering experience. Start by educating yourself about the fundamentals of Bitcoin, blockchain technology, and the various ways to acquire and use this digital currency. Numerous online resources, forums, and communities offer a wealth of information for beginners and seasoned enthusiasts alike. Take your time, start small, and never invest more than you can afford to lose. The world of Bitcoin is constantly evolving, so staying informed is crucial. Remember, Bitcoin is more than just an investment. It's a technological revolution with the potential to reshape our financial systems. By understanding its intricacies and embracing its possibilities, you can position yourself at the forefront of this exciting new frontier. Bitcoin mining, often likened to a digital gold rush, is the process that brings new Bitcoins into circulation and secures the network. It's a computationally intensive process where specialized computers, known as mining rigs, compete to solve complex mathematical problems. These problems are designed to be difficult to solve but easy to verify. The first miner to solve the problem adds the next block of transactions to the blockchain, earning a reward in Bitcoin. This reward, along with transaction fees from confirmed transactions, incentivizes miners to participate in the network and maintain its security. However, mining is not for the faint of heart. It requires significant upfront investment in hardware, electricity, and cooling. The difficulty of mining adjusts over time, ensuring a consistent block production rate regardless of the total network hash rate. This means that as more miners join the network, the difficulty increases, making it more challenging and expensive to mine profitably. Aspiring Bitcoin miners face a crucial decision to join a mining pool or go solo. Solo mining, as the name suggests, involves using your own hardware to mine independently. While this offers the allure of keeping all the rewards for yourself, the chances of successfully mining a block alone are slim to none. Mining pools, on the other hand, bring together the computational power of multiple miners, increasing the likelihood of finding a block and earning rewards. These rewards are then distributed among pool members based on their contributed hash rate. Joining a pool significantly increases the consistency of earning Bitcoin rewards, albeit in smaller amounts. However, it also means sharing a portion of your earnings with the pool operator. Factors to consider when choosing a pool include its size, fee structure, payout method, and reputation within the mining community. In Section 3, we explore proof of stake, securing the network, earning rewards. While Bitcoin relies on the energy-intensive proof-of-work mechanism, other cryptocurrencies have adopted proof of stake. Proof of stake relies on the amount of cryptocurrency a user stakes as collateral. Validators are chosen to validate transactions based on their stake. Proof of stake is more energy efficient and environmentally friendly. It eliminates the need for expensive mining hardware, making it more accessible. Moving on to Section 4, we delve into exploring staking options. From exchanges to dedicated platforms, the rise of proof-of-stake cryptocurrencies has opened up new avenues for earning passive income through staking. There are numerous platforms and services that offer staking opportunities, each with its own set of features, risks, and rewards. Cryptocurrency exchanges, for instance, often offer staking services for supported cryptocurrencies. This allows users to earn rewards on their holdings without having to manage the technical complexities of staking independently. However, it's crucial to choose reputable exchanges with a proven track record of security and reliability. Dedicated staking platforms offer another avenue for earning passive income. These platforms often specialize in staking a particular cryptocurrency or a select group of cryptocurrencies. They handle the technical aspects of staking, such as node operation and reward distribution, while providing users with a user-friendly interface to monitor their earnings. In Section 5, we discuss Bitcoin lending, putting your assets to work. Bitcoin lending platforms provide another way to generate passive income. These platforms act as intermediaries, connecting borrowers seeking Bitcoin loans with lenders willing to provide their Bitcoin in exchange for interest payments. Lenders typically deposit their Bitcoin into a lending platform, which then lends it out to borrowers at varying interest rates depending on factors like loan duration and collateralization. The interest earned is then distributed to lenders based on the amount of Bitcoin they have lent out. While Bitcoin lending can be a lucrative way to earn passive income, it's not without risks. Borrowers may default on their loans, leading to potential losses for lenders. Additionally, lending platforms themselves can be vulnerable to hack or security breaches, putting users' funds at risk. It's crucial to thoroughly research and choose reputable lending platforms with a proven track record of security and transparency. Section 6. Crypto savings accounts, a taste of traditional finance. Crypto savings accounts offer a more familiar approach to earning passive income within the cryptocurrency space. These accounts, offered by various cryptocurrency platforms and exchanges, allow users to deposit their cryptocurrencies and earn interest on their holdings. Similar to traditional savings accounts, interest rates on crypto savings accounts vary depending on the platform, the specific cryptocurrency deposited, and the duration of the deposit. However, interest rates offered on crypto savings accounts are often significantly higher than those offered by traditional banks. While crypto savings accounts offer a relatively low-risk way to earn passive income on your cryptocurrency holdings, it's important to remember that these accounts are not FDIC insured like traditional bank accounts. It's crucial to choose reputable platforms with a strong security track record and to understand the risks involved before depositing any funds. Section 7. Choosing your path, assessing risk and reward. The world of Bitcoin and cryptocurrencies offers a diverse range of opportunities to generate passive income, from the computationally demanding world of mining to the more familiar concepts of staking and lending. There's an option for every risk appetite and investment strategy. However, it's crucial to remember that all investments, especially those within the volatile world of cryptocurrencies, carry inherent risks. Before embarking on any passive income strategy, it's essential to conduct thorough research, understand the underlying technology and mechanisms involved, and assess your own risk tolerance. Diversification, a fundamental principle of investing, is particularly relevant in the cryptocurrency space. Spreading your investments across multiple passive income streams can help mitigate risks and potentially enhance overall returns. Remember, the key to successful passive income generation lies in informed decision-making, a long-term perspective, and a healthy dose of caution. Section 1. The allure of financial freedom. The pursuit of financial freedom is a universal aspiration, a yearning to break free from financial constraints. Bitcoin, with its decentralized nature, offers a path to financial independence. Imagine a world where your money is truly yours, free from centralized control. This is the promise of Bitcoin, built on autonomy, transparency, and accessibility. Bitcoin empowers individuals, giving them control over their assets. Section 2. Breaking free from traditional constraints. Traditional financial systems often impose numerous constraints on individuals, limiting their financial freedom and hindering their ability to fully participate in the global economy. From restrictive account requirements and high transaction fees to currency manipulation and government interference, the current financial landscape is riddled with obstacles that Bitcoin seeks to overcome. For instance, accessing basic financial services can be a significant challenge for the unbanked and underbanked populations worldwide. Opening a bank account often requires extensive paperwork, proof of address, and minimum balance requirements, effectively excluding millions from participating in the formal economy. Bitcoin, on the other hand, requires no such prerequisites. Anyone with an internet connection can create a Bitcoin wallet and start sending and receiving transactions, regardless of their location, credit history, or social standing. This open and inclusive nature of Bitcoin has the potential to revolutionize financial inclusion, empowering individuals across the globe. Section 3. The power of low fees, a case for Bitcoin. Transaction fees, often a hidden cost associated with traditional financial services, can significantly erode the value of money transfers, especially for cross-border payments and remittances. These fees, often a percentage of the transaction amount, can make it prohibitively expensive to send money to loved ones overseas or conduct business internationally. Bitcoin transactions, while not entirely free, generally incur significantly lower fees compared to traditional wire transfers or credit card payments. This is because Bitcoin transactions bypass the need for intermediaries like banks and payment processors, which often charge hefty fees for their services. The low transaction fees associated with Bitcoin make it an attractive option for microtransactions, small value payments that are often uneconomical to process using traditional payment methods. This opens up new possibilities for online content creators, freelancers, and businesses operating on a global scale. Section 4. Liquidity, navigating the Bitcoin market. Liquidity, the ease with which an asset can be bought or sold without significantly impacting its price, is a crucial factor to consider when evaluating any investment, including Bitcoin. The Bitcoin market, while still relatively young compared to traditional financial markets, has grown significantly in recent years, attracting both retail and institutional investors. This influx of capital has led to increased liquidity, making it easier to buy and sell Bitcoin on various exchanges and trading platforms worldwide. However, it's important to note that Bitcoin's price can be volatile, susceptible to rapid fluctuations, influenced by factors like market sentiment, regulatory news, and technological advancements. While this volatility can present risks for short-term traders, long-term investors often view it as an opportunity, buying during price dips and holding for potential long-term growth. As the Bitcoin market matures and institutional adoption increases, liquidity is expected to further improve, potentially leading to more stable price action over time. Section 5. Security and transparency, pillars of the Bitcoin network. Security and transparency are paramount in any financial system, and Bitcoin excels in both areas. The decentralized and immutable nature of the blockchain, the underlying technology behind Bitcoin, ensures that transactions are secure, transparent, and resistant to censorship. Each Bitcoin transaction is cryptographically secured and recorded on the blockchain, a public ledger that is distributed across a vast network of computers worldwide. This means that every transaction is verifiable by anyone, making it virtually impossible to alter or tamper with transaction history. This level of transparency and security is unprecedented in traditional financial systems, where transactions are often shrouded in secrecy and vulnerable to manipulation by centralized authorities. Bitcoin's open and auditable nature fosters trust and accountability, providing users with peace of mind knowing that their transactions are secure and their funds are protected from fraud and censorship. Section 6. The global reach of Bitcoin, transcending borders. Imagine a world without borders, at least when it comes to finance. Bitcoin, with its decentralized and borderless nature, transcends geographical boundaries, enabling seamless transactions between individuals and businesses worldwide, regardless of their location. Unlike traditional financial systems, which often impose restrictions and high fees on cross-border payments, Bitcoin transactions flow freely across borders, bypassing the need for intermediaries like banks and currency exchange services. This makes Bitcoin an invaluable tool for international trade, remittances, and global commerce. For individuals and businesses operating in countries with restrictive capital controls or unstable currencies, Bitcoin offers a lifeline, a way to preserve wealth and transact freely without being subject to the whims of governments or financial institutions. This global reach of Bitcoin has profound implications for the future of finance, fostering financial inclusion and empowering individuals across the globe. Bitcoin, a catalyst for financial inclusion? Financial inclusion is crucial for economic growth and societal well-being. Billions remain excluded from traditional financial systems. Bitcoin can bridge this gap, providing financial inclusion for the unbanked. Anyone with internet can create a Bitcoin wallet and transact globally. Bitcoin's low fees and borderless nature empower underserved communities. Section 1. Volatility, riding the Bitcoin roller coaster. Bitcoin's price volatility is legendary, captivating and unnerving investors in equal measure. Its value can fluctuate wildly, sometimes gaining or losing a significant percentage of its value within hours. This rollercoaster ride can be exhilarating for seasoned traders seeking to capitalize on short-term price swings, but can be daunting for newcomers unfamiliar with the market's capricious nature. Several factors contribute to Bitcoin's price volatility. News events, both positive and negative, can trigger significant price movements. Regulatory announcements, technological advancements, and even social media sentiment can sway market sentiment, leading to sudden surges or dips in price. This volatility, while inherent in any emerging asset class, is particularly pronounced in the cryptocurrency market, where trading volumes are relatively small compared to traditional financial markets. As the market matures and institutional adoption increases, volatility is expected to subside, but for now it remains a defining characteristic of investing in Bitcoin. Section 2. Regulatory uncertainty, navigating the shifting sands. The regulatory landscape surrounding Bitcoin and cryptocurrencies remains a complex and ever-evolving terrain. Governments worldwide are grappling to understand this new asset class and formulate appropriate regulations, leading to a patchwork of rules and guidelines that can vary significantly from one jurisdiction to another. This regulatory uncertainty can create challenges for businesses operating in the cryptocurrency space, hindering innovation and investment. Some countries have embraced Bitcoin, creating favorable regulatory frameworks that foster innovation and attract businesses, while others have taken a more cautious approach, imposing restrictions or outright bans on cryptocurrency activities. This lack of regulatory clarity can also create opportunities for scams and fraudulent activities, as bad actors exploit loopholes and regulatory gray areas. Investors and users should exercise caution, stay informed about the latest regulatory developments in their respective jurisdictions, and only engage with reputable companies and platforms operating within established legal frameworks. Section 3. Security concerns, safeguarding your Bitcoin holdings. While the Bitcoin network itself is incredibly secure, thanks to its decentralized and cryptographically protected nature, the same cannot always be said for the platforms and services that interact with it. Cryptocurrency exchanges, wallets, and other service providers have become prime targets for hackers seeking to exploit vulnerabilities and steal valuable digital assets. High-profile exchange hacks and scams have made headlines, highlighting the importance of taking appropriate security measures to safeguard your Bitcoin holdings. Strong passwords, two-factor authentication, and cold storage solutions, storing Bitcoin offline, are essential practices for mitigating risks and protecting your investments. Users should also be wary of phishing attacks, where scammers attempt to trick users into revealing their private keys or login credentials through deceptive emails, websites, or social media messages. Always double-check website addresses, verify the legitimacy of communications before sharing sensitive information, and report any suspicious activity to the relevant authorities. Section 4. Environmental impact, the energy debate. Bitcoin's energy consumption, particularly its proof-of-work consensus mechanism, has drawn criticism, sparking debates about its environmental impact. Mining Bitcoin requires significant computational power, which translates into substantial energy consumption, primarily from electricity. Critics argue that this energy-intensive process contributes to greenhouse gas emissions, particularly in regions where electricity generation relies heavily on fossil fuels. They point to the environmental cost of mining, arguing that it outweighs the potential benefits of Bitcoin as a decentralized and alternative financial system. Proponents, however, counter that the Bitcoin network is incentivized to seek out the cheapest forms of energy, which are often renewable sources like hydroelectric, solar, and wind power. They argue that Bitcoin mining can actually accelerate the transition to renewable energy by making it economically viable to harness otherwise stranded renewable energy sources. Section 5, Scalability Challenges, Bitcoin's Growing Pains. As the Bitcoin network has grown in popularity, it has also faced challenges with scalability, its ability to handle a growing number of transactions efficiently and cost-effectively. The Bitcoin blockchain, designed with a limited block size, can only process a finite number of transactions per second. This limited throughput can lead to network congestion, especially during periods of high transaction volume, resulting in slower transaction confirmation times and higher transaction fees. While various solutions, such as the Lightning Network, have been proposed and implemented to address these scalability challenges, they are still under development and have yet to be widely adopted. These scalability challenges are not unique to Bitcoin. They are common to many blockchain-based systems. However, they highlight the growing pains of a decentralized and permissionless system as it strives to achieve mainstream adoption and handle the demands of a global user base. Section 6. The Dark Side of Decentralization, Illicit Activities. While Bitcoin's decentralized and pseudonymous nature offers many benefits, it also presents opportunities for illicit activities, as criminals and bad actors exploit these features for their own gain. The lack of a central authority and the ability to transact relatively anonymously have made Bitcoin attractive for activities such as money laundering, tax evasion, and purchases on the dark web. Law enforcement agencies worldwide are working to combat these illicit activities, developing new tools and techniques to track Bitcoin transactions and apprehend criminals operating in the cryptocurrency space. However, the pseudonymous nature of Bitcoin and the global reach of the network present significant challenges for investigators. It's important to remember that Bitcoin is a tool, and like any tool, it can be used for both good and bad purposes. While its decentralized nature empowers individuals and promotes financial inclusion, it also requires users to be vigilant, responsible, and aware of the potential risks involved. As we conclude our exploration of Bitcoin and its potential for passive income, it's clear that we're dealing with a double-edged sword. On one side, we have a revolutionary technology with the potential to reshape finance, empower individuals, and create new avenues for wealth creation. On the other side, we have inherent risks, volatility, regulatory uncertainty, and the potential for misuse. The scales of opportunity and risk are constantly in flux, influenced by a myriad of factors, from market sentiment and technological advancements to regulatory developments and global economic trends. It's a dynamic landscape that requires careful navigation, a discerning eye, and a healthy dose of caution. The allure of financial freedom, low-cost transactions, and global accessibility is undeniable. Yet, the potential for volatility, security breaches, and regulatory crackdowns cannot be ignored. This delicate balance is what makes the world of Bitcoin both exhilarating and daunting, a realm where fortunes can be made and lost, and where the only constant is change. Bitcoin has left an indelible mark on the world. It has sparked a global conversation about money and decentralized technologies. Challenging traditional finance, Bitcoin inspires innovation and financial literacy. As we navigate this uncharted territory, knowledge is our most valuable compass. Understanding the fundamentals of Bitcoin, its underlying technology, its potential benefits, and its inherent risks is paramount for making informed decisions and safeguarding our financial well-being. This knowledge empowers us to engage with this new financial paradigm from a position of strength, to separate hype from reality, to identify opportunities, and to mitigate risks. It allows us to participate in this global conversation, to contribute to its development, and to shape its future. The world of Bitcoin is constantly evolving, with new technologies, regulations, and use cases emerging all the time. Continuous learning, critical thinking, and a willingness to adapt are essential for navigating this dynamic landscape and harnessing the transformative power of this technology. As the curtain falls on our exploration, one question lingers: will Bitcoin and the broader cryptocurrency revolution truly transform the world? Will it usher in a new era of financial freedom and reshape the global economic order? The future is a tapestry woven from countless threads of possibility. The rise of Bitcoin is a testament to the transformative power of technology. The genie of decentralization is out of the bottle, and the world of finance may never be the